What's up? We are back at it again. So off of one stream onto the other. The reason why I'm doing this real quick live stream is just to review the market with everybody. I didn't get a chance to do my standard market update video, so I figured I would just run it through here really fast. I can't tell. It doesn't look like it's working yet. Okay. Okay, there it goes. What's up, everybody? Quick transfer from the Outlier Pro live stream over to here, but I didn't get a chance to do my standard market update video, so I didn't want to leave you all hanging. Thought I would do it super fast via a live stream and keep the ball rolling and just essentially talk about what I would in that standard market update. Okay, so let's hit a few things. The very first thing is we have a few standard things coming up this week. Most of them are not massively high impact, but they always have the potential to cause some noise. So I'm going to slide this over a little bit so it might be a little easier to see. So kind of consolidate that down so that we can see a little bit more from here. And so we have consumer credit. That's a really low impact event. Actually, I'm just personally interested in it. Oh yeah, let me grab the chat. I forgot. We have a new group of people on this one from the last one. And I want to say hello to everybody. So we got Tommy. Tommy made it over super fast. Good to see you. And then we also have Ape of Spades. Great to see you, my friend. I hope you had an awesome weekend. Cool. So consumer credit, I'm interested in that from a broad perspective, just because I think the consumer right now has looked weak. And I say that because I see savings going down. Consumption is still about the same, going up a little bit. And I'm seeing debt being a larger component to it. So I don't love that when I think about it. So from consumer credit, I just want to see how this is continuing to fare, because one of the biggest questions that we have in front of us is, what does 2025 look like? And is it a recession or is it not? And the answer to that is like massively important. The reason why it's so important is because if we start entering a recession, the market has really, really specific behavior around recessions and how long they last, stuff like that. So it's a little early to say, but the last prospects that we saw from, let's take a look, probability of a recession in 2025. And let's see what we get from here. We got Reese saying hello. Zachariah says, good God, get some sleep. Dog, I do markets. This is what I do. Plus, it's honestly, it's only 6:50 here in California. I do need to launch my dinner order soon, though. Perfect. Perfect, perfect. Thank you for bearing with me. Your boy needs to get fed. We're doing Carl Strauss. We're doing that brewery again. Ape of Spades says, bro, do you even markets? I was telling on the stream right before this, I was talking with Peruvian Bull, and he and I chatted for like 40 minutes right before. And I was telling him how funny it is that I essentially I've picked a few things to like really specialize in my life. I have a bunch of things that I'm an inch deep, mile wide, but there's a couple things that it's the kind of the opposite, that I went very, very in detail. And it's hilarious to me that I look at something like markets and that's something I've clearly chosen to specialize in. And it's so funny to me because it's all bullshit. It's all this trading is all fake. It's the process of looking at fake stuff, coming up with fake ideas, and then clicking buttons and creating fake online coupons. It's hilarious to me. That's actually part of the reason why I make the joke during the streams about like the fake internet points, because like this is it, right? It's just like blinky lights. Damn it, the NASDAQ is down. I grabbed some futures earlier. I knew it was an early prospecting entry, but damn, the Russell looks good here. Let me finish this thought and then we'll look at that. Ape of Spades says, but what's real enough to make money on? That's exactly correct. And it's the reason why I do it is because what I make that joke typically, right, to kind of poke fun at one of the things I've chosen to specialize in. But I always remind myself that it gets real when I pull money out, and you can go do real things with the real money. So yeah. But okay, so here, Statista saying 62% probability. Actually, let me just screenshot this. I want to track this. That's why I want to screenshot it. So I'm going to post this in the Discord just so that we have it for reference, because it'll timestamp it for us. I'm curious how this behaves. Y chart says 57%. This looks a little higher. JP Morgan coming at 45, and JP Morgan has called a few things right. So I actually think JP Morgan, Goldman Sachs 25? That seems real low. Well, it says previously. I don't know when they did that, but that seems real low. Huh. And then just so you know, I have to keep I have a chat open right now with Schwab, because Thinkorswim has some sort of really annoying bug. When we were on the pro live stream right before this, looking for some trades in general and just talking about some trade ideas, one of the things that I do is I use things that have been moving a lot, right? So I'll look at stuff that's had bigger percent changes over different time frames. And then when I look at some of those time frames like this is the wrong scan. Let me grab the one. So like this is, I'm filtering by what's up the highest over the past 6 months. And this is showing ADMA. It is completely missing right above my head here. ASTS, LUMN, Novavax, like it doesn't even have them, which I don't understand at all why it's doing that. Oh, there we go. We just got hit up by Schwab. Oh, that's funny. Eric B. That's who's going to talk to us. I'm going to have him read my shit and see what he says. But in the meantime, let's get back over to the chart and the Russell. I want to look at the Russell because right now it looks like the Russell was showing some relative strength that's now weakening. This starts to look like a lot of stuff is topping to me. So E-minis flattening out. NASDAQ still struggling even to get back to past highs. Russell, I need to clear some of these price levels out because it's a little too noisy. Yeah, Russell is still one of the weaker of the bunch. VIX ticking up just a little bit from commodities. Crude still looks super strong. Nat gas rolling over. Wheat and corn both finishing their rally. I traded the rally specifically in corn. Eric is asking, where are you seeing those having at least 25% gain from another platform, Benzinga? I then validated by doing the math on the chart as well. All right. Zachariah says, I get that. The overreaction of the market is ridiculous. Yeah, it can be. And that's one of the things that makes trading the market so fascinating, is that you're partially trading, economic ideas and efficiency metrics. And then the other thing that you're doing is trading quite literally human emotion, which is really interesting. So to summarize what I've seen so far from like a quick look at overall futures markets is stall. Like that's what comes to mind as I glance at this stuff. I see all of these standard deviation channels, the slopes are flattening on essentially all of them, which tells me that they're stalling and slowing down. And then I take a look at E-minis, which is still the strongest. The S&P 500 is still the strongest of the group, but it's like this is topping. Now, if it rallies out of here, that looks really good because then it's continuation of the trend. And this is a pretty well-established trend at this point. If we go out, let's do a year, like this has been a really rock solid trend. But one of the things that I like to use is prior consolidation periods. And I look at the duration of consolidation. Eric is asking, where in the platform am I doing the search? I did the scan under scan stock hacker. The only filter I used was price change greater than 25% last 180 days. ASTS is up over 900%. LUMN is up almost 400%. Neither are on the list at all. Okay. We'll let Eric with the C chew on that for a minute. Zachariah says, Indo a two-bagger, swing trading that mess, drop it before Wednesday. I embellish, but it's my trade. Well, we can take a look at Indo. But for E-minis, this is like, take a look at the consolidation periods, right? So let's say it started to top here, right? So it was rallying, still showed strength, started to top here. So we had 1, 2, 3, 4, 5, 6, 7, 8 consolidation days. So here, rally, top here. So 1, 2, 3, 4, 5, 6, 7, right? So we are coming up on when, based on some of the prior rallies, and these are, again, longer consolidation periods that I'm tracking. So when I look at, when I look at this longer period, this slower topping pattern, because the other thing is like to get from here to here was a very slow progression. Then it topped, right? So if we look at what that looks like here, it's bigger green bars, more aggressive rally, more buying activity that then tops. So it's a little bit of a mixed bag. It can always gain a little bit more steam, and that's why I'm still long equity exposure, but I'm being really, really careful here. Now, the Russell I'm noticing right now is flopping around. Let's take a look at, wow. This thing's been all over the map today. Big sell-off there. What is this saying? It's up 10th. Huh. And then let's take a look at, I'm going to zoom out a little bit. Let's take a look at the Qs. Yeah, Qs, this is like a really speculative trade for me. I have a very, very tight stop. And the reason why I'm running it so tight in Qs is just because I think it has, depending on what kind of stuff comes out this week, I think we might still see a little bit of a decent rotation into tech, but tech doesn't look overwhelmingly strong to me. So the position that I entered is very, very small. And it's 100% by design because I don't really trust tech right now. So if we take a look at the sectors themselves, a little bit cleaner of a look, tech essentially took out highs here. And the part that I like about tech is that I'm seeing higher lows, low, higher low, higher low. But this is not an impressive takeout of this high. So I don't look at that as, oh yeah, this is looking like super strong to me. I really don't feel that way at all here. And I think one of the bigger components as I'm watching tech is I really need to get a sense of where the next strength regime is coming from. And because it's been communications, it's been utilities, and it was financials. Financials is dropping off, right? So I can see that it posted a high here. It challenged it, but it didn't close here. And then it posted it here. Now, this still looks bullish. This just looks like a broader consolidation, but this needs to take out these highs. Now, communications and utilities, they continue to post highs. But if you'll notice that the way that this looks, a vast majority of these are starting to rotate over. Builders coming down. Energy still looks really good. I think this is heavily fueled by that oil rally. And XLI industrials does look good. Staples starting to fall off. So that like you can see it's just a bit of a mixed bag within the index. Whereas before, as I've been talking about the S&P 500, it's been broadly supported by most of the subsectors, right? So what I'm highlighting to you in this kind of piece by piece accounting is I'm seeing a few key trends that make me question the overall strength of what we're seeing. Percentage of S&P 500 companies above 50-day moving average, downward sloping. Don't love that. I'm seeing a longer consolidation period here as well within the S&P 500. I'm also seeing from a sector perspective, more of the sectors starting to show either consolidation or weakness, and consolidation can be fine. This isn't some sort of like bear manifestation. This is just noting objectively what's happening. And then this way we can ideally position ourselves, because that's the way I look at it. This all feeds into how I choose to position myself. So tech, I don't love where tech is, although, and the reason why I don't love where tech is tech has been such a strong promoter of strength within the S&P 500. That's been slowing down. So that's what I'm seeing generally across the board. Now, when I look at, again, going back to what we have coming up this week, we already hit the 7th. When we look at the 8th, there's not a lot of stuff in here that I care that much about. The 9th, same thing, other than the meeting minutes. That's the big deal on the 9th. On the 10th is when we see retail sales, CPI. Both of those are big deals. So the 10th, I think, will be slightly more volatile. And then we also have the balance sheet, which is kind of less important, but I like to look at it myself. And then on the 11th, we have unemployment, we have core PPI, the Michigan sentiment, which again, these matter, both inflation and the consumer, because we're right now massively trying to understand what is the likelihood that we find ourselves in a recession, because everybody is trying to position for that sooner rather than later. And then the 12th, we have PPI, CPI year over year, month over month. So I don't know what this is. Wait, why is this? CPI month over month. CPI, what's the difference here? Why is CPI on the 10th and the 11th and the 12th? What is that? I'm going to check out another website that I use really quick. So this is showing me on the 10th, I see CPI. Yeah, so on the 10th, I see, here, I'll show you. On the 10th, I see CPI, year over year, month on month, core CPI, year over year, month on month. And then on the 11th, I see PPI and core PPI. And then on the 12th, I don't see anything. So this looks like an error. Yeah, that just looks wrong. I was just talking about this. I literally hate seeing data discrepancies like this because it makes me doubt everything I look at. Super frustrating. Okay, cool. So I just heard back from Charles Schwab, and the dude essentially doesn't understand why another fucking data issue. But he was saying that he doesn't understand why it's not showing up. So then he's going to follow up with me tomorrow because a couple of those stocks should be showing up that are not. Another fucking data issue. See, that's one of the problems with doing this stuff is that there's a lot of data issues that you have to sift through. And that's super, super annoying. Okay, so for this, I want to take a look at any unusual options activity from the past week. I'm going to get rid of that. I am going to move this up. This up. Oh, no, there's actually a better tool that I use. Hold on, where is it? Description. So I need these two things at the front. I need vol over OI. And then I need the description. Perfect. And then I need to get rid of a few things from here. No, 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 no. I thought there was an easy filter. Oh, there we go. Security type. That's what I want. I don't want ETFs. I don't really care about ETFs. And we want volume over OI. We want to see meaningful volume over OI. So that's just a simple way to scan through unusual options activity. This is one of the tools that I'll use and poke through and see where we're seeing stuff being built out and where and why. But right now, the other thing I need to move up is trade value. This is another one where they move my shit, which is super annoying. So I normally do trade count up here, and then I want trade value. The reason why I care about trade value is because it helps me like scan through some of the noise. A lot of this stuff, like I don't care if it's like a $5,000 trade. Sometimes I'll even sort by this. And so like this, that's interesting to me. So we have something CPRI. Let's take a look at that. So this had 1 million. in total premium. It still doesn't have big skew though. So that's kind of interesting. What happened here? They were calls at the bid. Okay, so is somebody just selling calls? Okay, I don't really care so much about that. Rich says, I'm new to your channel and I'm curious why you don't talk about the reason why we didn't see rally after the Fed rate cut in jobs numbers was because of the longshoreman union strike, which ended. Sorry, I'm not totally clear on your question, but I've discussed the Fed rate cut a bunch of times already. That's pretty old news. The Cliff Notes version of what I've discussed around the Fed rate cut is pretty simple, though. The overwhelming majority of it is going to be priced in before the move happens because markets are smart. People are going to front run the move. So there was a slight continuation when we had the actual cut, but the market had already been prepared and positioning for that cut quite a while from before when it happened. So that's why there's not like this big surge of price after the Fed cuts rates, is because it's broadly expected. We can actually see this even more clear if we look at the Russell, because this is when the Fed, and that's simply because the expected impact to small caps is larger than, the expected impact to large caps. And when we look at this initial move that I'm highlighting here on the 11th of July, the market was essentially reacting to this new pricing of Fed rate probability of a cut and got straight into all that euphoria that then came cratering down in the beginning of August. Then again, we start trying to price in the probability of this cut before it happens again, and then it starts contracting back down. So the market is continually trying to front run the move. Rich says the longshoreman strike did have a significant effect last week, don't you think? No, I don't think so at all. We actually, again, this is another thing I reviewed last week when we did, I think it was a Sunday stream with the pro members, but I was surprised at how little the reaction was, because again, we can see it in futures, right? So when we heard the news of the strike and we heard the news of no agreement, it was during a Sunday live stream that we were reviewing it, and the futures didn't care at all. So that told me that the market overwhelmingly thought it was going to be resolved very quickly, which it was, right? Like the strike was like 2 days, if that. So I think that's a function of just the market being a very smart pricing mechanism. What ended up moving the markets much more this week was Iran, Israel, without a doubt, because as soon as that news broke, we saw crude oil fly. We saw defense stocks fly. I actually have a couple positions on in RTX right now, full disclosure, because of it. Like literally just playing the continuation of that move, simply because that's exactly how markets behave with new news that comes out like that. So yeah, I don't actually think I was surprised myself that the longshoreman strike didn't have as much of an impact, because if you look at the potential, the severity of an extended strike, it's massive. And that actually could be why the market didn't think it was going to happen, because the market likely knew that the potential impact for a prolonged strike is absolutely massive. So then they're probably thinking that they're not going to let it get to that. That's my assumption. But yeah, Zacharias says, I'm surprised Raytheon doesn't show more gain. I mean, how much gain are you looking for, man? I think expectations sometimes can get skewed, right? Because if you look at Raytheon over the last year, it's essentially fucking doubled. So it's like, you got to have more people willing to buy at different elevated levels. And I mean, even on the news of the war, it did tick up like pretty meaningfully. So I guess I just don't know how much, war, I guess I should call it conflict, because we don't really know what it is right now. But I feel like it did move. But it also moved at a point where it's essentially hanging out near all-time highs, which when stocks are at all-time highs, they tend to need a little bit more of a push in order for them to like show strong movement. That's my 2 cents on that. But it does have the potential, because we need to see how the conflict continues to escalate, which I actually haven't looked at lately. So let's look that up right now. Iran, Israel conflict news. All right. Let's check this one out. You guys want to watch some of this? I'm kind of curious. Rich says, is it possible that the combination of the Fed rate cut and employment numbers offset the strike, causing a sort of balance, which if my theory is correct, we should have a bull run the week? Maybe. Markets aren't that discreet, right? Like, I don't think it's wise or really fruitful to try and like discreetly summarize, because like even over the course of the week, we had a ton of other news, right? Like to your point, I would argue that one of the main things you're missing from the theory you have is this conflict, because this conflict is moving the market. Like I can see it. We know it's happening. So the problem with trying to like neatly summarize markets like that is I know that that's like really popular, and I know people like that a lot. And we like it because we like clear resolution in our minds. We like, a relatively easy, simple story that can be like summarized at a high level. And sometimes that exists, but in general, markets are just so multivariate that there's a ton of shit going on. Because the other thing that kind of belongs in the thesis for you, Rich, I think at least, is like we're getting closer and closer to the election. So standard stock market election effects will start coming into play, kind of similar to earnings. We also have earnings coming up this week. So with the banks reporting on Friday, any sort of expectation of earnings around that is going to start being discounted. Same things when Delta Airlines reports midweek. I think it's Wednesday for them. So a bunch of things are being fed in. I think at a high level, though, to think about the bull run or not, I do think that the market, I don't think that there's a lot of new news that I think is driving the market down at this point. So that would lead me to favor, similar to you, either continued consolidation or an up move. But one of the reasons why I don't bother making statements personally like the market should go up this week or should go up this month is because as soon as there's new news, it can change immediately. So the whole idea is really open pretty massively in these shorter term time frame analysis, especially over the course of like a week. Now, there are things I can summarize with strong confidence, like for example, over the next 5 years, I expect equities to outperform something like debt, and I expect equities to be priced probably higher than they are now, right? But that's really long-term run. And that's by design, because that weathers the intermediate storms of news cycles that impact markets. So could the market have a rally this week? Of course. Could it also decline this week if new news comes out? Of course. And we really don't know which one it is. Now, I completely agree with you, Rich, in the concept of like trying to come up with an estimation for sure based on no new news. I think that's completely normal. I do that all the time. And like I said, I'm actually on the same boat as you, where right now, pending no new news, I view it as probably continued consolidation. And if we start to get a rally, then obviously up and out. But I don't see anything so far that hasn't been priced in that would lead me to believe big pullback or downside move just yet. Although, again, we have some big numbers coming out this week. CPI, PPI, those will be big deals. All right, let's watch a little bit of this because I'm just kind of curious.
هيا على طريق المطار.
Damn. Brutal. Absolutely brutal. Let's see. I want to go. Okay, here we go. This is exactly what I was looking for. All right, so it's 0130 Tel Aviv recap of what's been going on. Israel launched fresh strikes Beirut's southern suburbs on Sunday, a day after heavy consecutive strikes on the capital. So they're using jets and a second targeting to the Burj Al, I don't know how to say that, Barajna area. Lebanese state media reported 2 additional strikes described as violent. Lebanese security sources say Israel strikes since Friday were keeping rescue workers from scouring the site of Thursday night's attack. That part's fascinating to me, where we kind of we're openly the proverbial we're kind of taking the perspective of these two counterparties. We're having like this weird quasi. It's not a full war. They're not going to full fight yet, but they're fucking one another up. And then they make it like, well, you guys are, being mean because we can't go check out the site from Thursday to go help people. But it's like you're in the middle of rocketing one another. It's like, it's just one of the weirdest things with these kinds of conflicts. And the Middle East has been like this for a long time. Again, I'm spent a lot of my military career studying these conflicts because they're so prevalent. It's very, very interesting. Hezbollah said it targeted Israeli military base near the northern city of Haifa late Sunday, third attack military position in one day. IDF ordered closed military zone around 3 towns, expanded its actions in Lebanon, making its first strike in the northern city of Tripoli. UN peacekeeping force in Lebanon said it's deeply concerned by what it called Israel's recent activities adjacent to the mission position outside Lebanon, that the IDF are an extremely dangerous development as it urgently reminded all actors of their obligation to protect UN personnel properties. Said it's outrageous for the IDF to have threatened to unfill. Oh, that's interesting. 2,000 people killed in Lebanon. So one of the things I would like, though, is to understand both sides of this. This looks like kind of very one-sided accounting, right? Because it's talking about all of the carnage in Lebanon, which again, there's mutual carnage here, but I would like to see both sides. Because now it's talking about the Palestinians killed. I don't know how many Israelis. At least 41,000. 870 Palestinians killed by the IDF since 7 Oct. Yeah, but I would really like to know the other side. I'm gonna do a quick Google search. Iran, Israel conflict, casualty count. Let's see what this says. Gaza, South Israel. There we go. Israel blames UN and Hamas for aid blockade. So now they're just kind of pointing the fingers. Yeah. Iran cancels flights until Monday. Lebanon delaying the school year. Interesting. Really, really interesting. So what is the actual death count? First side. See if Wikipedia has it. I really don't like that it's so difficult to find actual information. Well, this is going back to 85. Do they have like a recent? There's like a recent section. Israel, Iran proxy conflict. Yep. Okay, so 7 Oct Hamas, a Palestinian militant group partially funded by Iran, launched an attack. See, like, this is kind of important because when you read it from here, it gives you a slightly different perspective, right? Because this, like this, at least 42,000 Palestinians killed by Israel's military offensive. And again, I'm not coming at this pro either side, genuinely. I'm looking at this as just reading information and trying to understand the state of things. I purposely reserve judgment because I always feel like these conditions are always so complex, and I don't feel like I know anywhere enough to have like a strong opinion. So yeah. Okay, so this shows 2024. Iran embassy goes. Iranian strikes on Israel 13 of 14 April. Israel goes 19. Okay. 17th September, new war goal to return civilians displaced by Hezbollah back to their homes in Israel. Fuck, man. So this thing just keeps on rolling. Shitty. Don't sell my information. Okay. Well, not fun, but I like to keep abreast of what's going on in the world. So that's kind of part of it. Rich says, what are your expectations on Bitcoin if Trump wins, especially when you factor in the strategic federal Bitcoin reserve plan? Oh, I still am bullish Bitcoin. I think long-term Bitcoin is still being valued and priced in. But yeah, I think Bitcoin, regardless of who wins, I still think Bitcoin is overall bullish long-term. Now, I imagine Trump would probably be a slightly stronger promoter and mover of Bitcoin. But yeah, I mean, right now, in a short-term time frame, it's not looking too good. But the interesting question becomes like, where is a proverbial floor? Which for me, any way that I trade cryptocurrencies is always long-term holdings. I don't try to trade it. I just kind of hold it. But yeah, I mean, it's definitely still negative sloping. No doubt there. It looks like there might be, like, this is a massive point of control. So lots of people transacting in there. So there's a lot of interest. That's without a doubt. But yeah, Bitcoin looks tenuous right now. Reese says, did you watch the main event last night? I didn't see it. I watched it today, though. I watched the recap. It went longer than I thought because Pereira definitely took his time. And it looked like, Roundtree, like, he held his own, I think, way more than people thought, like super explosive early on. So I thought it was a fucking fantastic fight. Really just banger of a fight. But I still feel like, I just think Pereira was kind of taking his time. I don't think that Pereira was outmatched too much like at too many phases during the fight. Michael says, what is happening? And they're going to do a strike now. I assume you're talking about the port. And no, not for the time being. So the port strike as it sits is resolved until their next negotiation, which I think is next year, if I'm not mistaken. Anti-automation stance. See, that stuff, I just don't agree with them. I just don't agree with them. I don't like the idea of keeping a job around just because of like keeping a job around. I really think that the workforce needs to continue to evolve to match what technology currently exists. Because this is, I mean, it's just silly, right? Automation there would be fantastic for everybody else. So this idea of like just keeping jobs so that you have a job, I get it, right? But I just don't like that. It's so inefficient. And to me, it would be just so much more logical to pivot. Okay. So the ports start a 100-day countdown to the new strike, and automation is poised to be the deal breaker. Yeah. Like, this is nuts. Lance says automation is the same in the auto industry. Back in the day, automation will win in the wrong one. Absolutely. It's undeniable. That's the thing, is that it's absolutely undeniable. And the idea of like continuing to pay people just be like this, machines don't feed families. I just struggle with that. I understand the point, and I don't want that dude to lose his job, but conditions change and we have to be adaptable, I think, in the workforce. Also, to be abundantly clear, this is also a reason to fucking invest your money, because guess what's not automated? Your ability to trade, your ability to speculate, your ability to trade on the long-term profitability of good companies or invest in them even. So I think that this kind of thing highlights the importance of that kind of stuff. Rich says, I find it very concerning that the longshoreman negotiation delay is playing around the same time final jobs report comes out. Perfect setup for a crash, potentially. Yeah. And I think the other issue with this whole thing is like, they already got what, like a 62% increase in pay? Like, that's fucking crazy. Oh, here we go. Yeah, so that's what I thought it was next year. 15 Jan. They got a massive pay increase. Does this say what the, yeah, here. Daggett made good on his initial strike promises, raised its 50% wage increase to 61.5 over 6 years. At one point, the ILA was demanding up to 77%. Like, that's fucking crazy. But automation is an area of negotiation that will be tougher. No automation. Because here's what's going to happen here. The longshoremen obviously do a really important job, and I respect their contribution. But markets are efficient. And I mean, if I'm not mistaken, this Daggett dude has made a shit ton of money, like a shit ton of money. And that's also really, really frustrating, because it's like, I don't know. To me, it's like pretty fucking hypocritical. Daggett, longshoreman. But let me make sure I'm not getting out of line. I don't like this one by Bloomberg because it's like very pointed. The title, it says millionaire union boss, which I don't like that. So I'm gonna click another one. Who is this one? Who is Daggett? Because the other thing that I've recently found out, I was reading another article. Well, apparently his son is now making like over $700,000. He made over $700,000 in a year. Okay, so he served in Vietnam. I like that. Joined the Navy. Okay. Started as a mechanic up to a foreman. Okay. Yep, that's all good. Under the contract that expired May, top scale port workers with at least 6 years of service got 39 an hour, 81K a year. That's very reasonable. Starting pay for dock workers, 20 an hour, rose to 24.75 after 2 years, 31.90 after 4 years. This is a little light in the beginning, but if this is like a post high school job that you go start working, like, it's not crazy. Like, this is what's fucking crazy. Daggett, head of the longshoremen, has made over $900,000 last year. A total of $728,000 came from the ILA and $173,000 from the chapter for being president. That's insane. That is insane. What? And this guy's worried like this. How can you take this seriously? Corporate greed versus workers' rights. Where's the fucking fairness in this dude that's making $900,000 a year compared to even somebody here making 81? I struggle with that. It makes it so difficult for me to take the argument seriously from that perspective. Zachariah says the argument is that if there are guys pushing the load of what 60 did, they want more to do it. I mean, that I get, but if technology is helping them, I'm not sure that part. That's frustrating. Okay. Last thing I want to do before wrapping up is I do want to take a peek through what upcoming earnings looks like here, because we have a couple. I want to look at PEP because I normally try to trade PEP, which is before the market on the 8th. So trade would have to go on 7th before the close. And then I want to take a look at JP Morgan, Wells Fargo. So let's do that super fast. Let's go to earnings. Let's go to PEP. Let's see how they've done. They've had a handful of expansion post earnings, not too many and not overly severe. And their earnings in July, much better year over year. So that looks pretty good. Let's take a look at Wells Fargo. Wells Fargo over last July, earnings contracted a little bit, but still looks good. And then let's take a look at JP Morgan. They've been doing really well. Yeah. So JP Morgan has been pretty solid. So, I mean, really, all of these look pretty good to me. The main thing I want to pay attention to for JP Morgan is JP Morgan and Wells Fargo is just the earnings release itself. I want to read through their slides and see what they have going on, because I think they'll have a lot of really good information with respect to the prospects of a recession, overall health of consumer, and a lot of those like broader ideas. So I'm pretty eager to see their stuff. All right, gang, time for me to sign off. Go grab some dinner. Always awesome catching up with you. I will see you guys on the YouTube live stream tomorrow at 5 p.m. Pacific time, back to standard time. As always, if you need anything, hit me up, be an outlier. I'll see y'all later.